FedEx reported quarterly financial results on September 18th, 2025, and I was looking forward to these figures because FedEx plays a critical role in the worldwide economy. So I'm going to share with you the details, what it means for investors, whether I think the stock is a buy, hold, or sell, and what the fair value of this business is. So FedEx reported revenue of $22.2 billion, which is up from $21.6 billion in the same quarter last year. That's better than I was expecting because FedEx handles a lot of shipments of goods and it depends on the flow of goods in the economy. Of course, tariffs and increasing trade barriers means people are purchasing fewer goods, businesses are ordering fewer goods, and goods are not moving around as much as they would be in otherwise situations without those trade barriers. So the fact that FedEx's business performed relatively well in this macroeconomic environment was solid for FedEx investors, to be sure. The operating profit margin increased to 5.3%, up from 5% in the same quarter last year. Remember, a few years ago, FedEx initiated a several billion-dollar cost-cutting initiative, and they're on schedule in improving and reducing costs to serve customers meaningfully. FedEx management team said their earnings growth underscores the success of their strategic initiatives as we are flexing our network and reducing our cost to serve while further enhancing our value proposition and customer experience. Consolidated operating results improved in the first quarter, reflecting strength in U.S. domestic package revenue and continued structural cost reduction. I was especially surprised to see the strength in U.S. package revenue because of the tariff impact I noted earlier, but there are also some seasonal factors or temporary factors that are working in play here. Right after these tariffs were announced, there was a huge stall in orders and imports and purchases, etc. And then as the U.S. administration paused some of the tariffs, delayed some of the tariffs, and reduced the percentage of some of the tariffs, and there was deals with some of the countries, that created a rebound in some of those orders that were delayed right when those tariffs were announced. I expect going forward that there will be more headwinds to international trade as a result of those rising costs. Consumer budgets are already feeling pinched because of the inflation over the previous 5 years. And now if they have to pay a higher price for many of the goods that are imported, they're going to pull back and they're not going to spend as much. Click the link below to watch the full video.